Today we're talking about cracking the no money down purchase loan code, right? Okay, everyone's out there, well not everyone, but a lot of people are out there saying, hey, I'm buying my first house, I don't have the down payment money. I need one of those programs where they give you the down payment, okay? I can't say we give it to you, but they exist. But VA is no money down, and then there's USDA. When people say, Hesh, well, I've never been in the military. Okay, can't go VA. Hesh, USDA, I'm not buying a farm, good. Because USDA doesn't do farm loans on our side of what we do with the USDA. USDA is a rural housing loan. You've got to do it in rural areas, okay? You're not doing it in Chicago or Los Angeles or Miami, for God's sakes, okay? You've got to be in rural areas for a USDA loan. So there's location restrictions, but here's the truth, guys. Outside of San Francisco, Los Angeles, San Diego, Boston, and Miami, and other cities I haven't named, Chicago, stuff like that, fine, okay? The truth of the matter is, there's a hell of a lot more rural areas in America than there are Los Angeles, Californias, okay? So a lot of America qualifies for USDA loans. That is no money down. That is a true zero down loan. But here's the problem. Let's pretend you're living in Nashville, Tennessee, which is an amazing city. Well, you're living in Nashville and you're saying, Hesh, I wanna go no money down, but I can't go USDA, not in the city of Nashville, I can't. Location restrictions, can't do it in Nashville, okay? You can do it outside of the city, outside of the county, but not in the city. You say, Hesh, I'm buying the city, I want no money down. Okay, let's look at what we have. So what you have, let's just talk about an FHA loan, pretty easy one. FHA, the minimum down payment is 3.5% of the purchase price. That means that if you're buying for $100,000, you have to come up with $3,500. That's your normal down payment. Now, how do we get an FHA loan where you still come up with no money down? Where that comes from is the 3.5% down, instead of coming from you and you coming up with that money comes from, for example, the state, another entity, the city, a local municipality. Different cities sometimes give that 3.5% down payment. Now, the money's not free. For example, we give a second mortgage loan, so that 3.5%, I'm gonna give you the 96.5%. I place that as a lien against the house. There's an interest rate, a term, and a payment on it. I also give you the 3.5% that you need. Now here's the catch. On that one, for example, that we do, there's an interest rate, a term, and a payment on it. Now, there are some cities in the United States, you just have to call the city to find out if they offer it. Some cities, and there are states that have housing finance agencies that the money will come from the state. And with some of those down payment assistance programs, because that's the name for it, it's down payment assistance. We are assisting you with the down payment. For a down payment assistance loan, because it's a loan, if it comes from, for example, through a grant or the state or something like that, sometimes what you'll find is there is no interest rate, it's zero. There's no payment due. What they'll say is, we're gonna place it as a lien on title. There's no such thing as free money. They're gonna place it as a lien against the house. So you have two mortgages, the first of 96.5, the second of 3.5. Now, if your particular city says, we'll give you the loan, 0% interest, no payments, sounds wonderful. But they say things such as, you have to live in the house for 5 or 10 years. You cannot refinance, you cannot sell the home, otherwise you have to pay that money back. So you might not have a monthly payment with it, but the money exists and it's there. And if you ever go to sell or refinance the house, that money has to be paid off. That is what a no money down loan is. Now, the other restrictions or the other strings attached to it are, for example, now again, you have to talk to the individual loan officer to see what's available. There's not 1,000 of these programs. There's not a ton of these out there. I mean, a lot of lenders don't do these programs anyways. You gotta talk to the loan officer and see if they offer the program. But I'll give you some other examples of other qualifiers. For a lot of these programs, you have to be a first-time home buyer. You could not have owned a home in the last 3 years. For almost all of the programs, there are income restrictions. You cannot make more than a certain amount of money. For example, the entire household, even people who are not going on the loan. If you have an 18-year-old daughter who's working at McDonald's, sometimes for some of our down payment assistance programs, we need her W-2s and pay stubs. There's something called household income. How much income in total is in the household? The whole household cannot make more than $60,000 a year. That's called an income restriction. So you have to be a first-time home buyer. There's an income restriction. Now with Liberty's down payment assistance program, you don't have to be a first-time home buyer. By the way, I'll give you another one. Your standard debt to income ratio is typically limited to like 45% on most down payment assistance programs. For example, on ours, we go up to 56.9. We have no income restrictions on it. We have no debt to income ratio restrictions on it. You do not have to be a first-time home buyer. You can have non-occupying co-borrowers. There's other strings attached to it, but there's other guidelines to meet. Overall, keep this in mind. Make sure you're talking to the right loan officer. Make sure you ask them if the programs are available. And I'll tell you something else. Sometimes, because in those programs, the interest rates are typically higher than the market rate if you come up with your own down payment loan, sometimes it's better to come up with the money yourself, because with the lower rate, you get lower payments and it's worth doing yourself also. The right loan officer will explain all of those different angles. If you're looking for no money down, this is the stuff you want to look into and this is the stuff you want to ask. And on that note there, I'm just going to keep riding the storm out and cruise right into my next video, and we'll catch you on the next ones. By the way, like, subscribe, and share these videos. Let's talk to you later. See ya.